All right, today we're digging into the investment case for a company called Viviana Power Tech. A recent market analysis has raised a huge question about its future, and, we're here to unpack all of that. So, the whole analysis really boils down to one very exciting and, let's be honest, pretty ambitious question. Could this company be a potential multi-bagger? Okay, so for anyone who's not familiar with that term, a multi-bagger is basically an investment that grows to be worth many times what you paid for it. A 10-bagger, for example, means your investment has grown tenfold. It's kind of the holy grail every growth investor is on the hunt for.
So with that in mind, does Viviana Power Tech have what it takes? I mean, looking at the data, could it really deliver that kind of extraordinary return? Well, let's dive in and find out. To get to the bottom of this, let's start with the bull case. And wow, it's built on what you can only describe as an absolutely explosive growth story.
I mean, just look at the company's own revenue guidance. It tells a really powerful story. They're projecting this huge leap from 219 crores in fiscal year 2025 all the way up to over 850 crores by 2027. That is just a massive, massive growth trajectory. Let's just put that into perspective for a second. We're talking about nearly quadrupling their revenue in just 2 years. And what's really crucial here is that this isn't growth at any cost. Management is also guiding for some pretty healthy profit margins, right around 9 to 10%.
So you might be wondering, how can they be so confident about those projections? Well, it all starts with this one big number, 1,003 crores.
And what is that giant number? That's their current confirmed order book. And this is the key takeaway, right? This isn't just some forecast based on wishful thinking, it's backed by a solid pipeline of actual work that gives them really clear revenue visibility for the next 24 months. But the bull case isn't just about the numbers on the books. The analysis also points to some pretty strong signals of confidence, and they're coming from the people who know the company best, its own management.
So here's a key indicator. The company's promoters, the founders and key insiders, they were consistently buying up shares between December and March. Think about that. They were putting their own money on the line, which signals a really deep belief in the company's future.
And this confidence, it seems to be backed by a really clear strategy for growth. They're strengthening their manufacturing by acquiring ARS transformers. They're expanding their geographic reach into Africa. And at the same time, they're diversifying into real estate and infrastructure to build out multiple revenue streams. They're making moves. And it's not just about Viviana's internal strategy. The entire power sector is getting a massive boost right now. We're talking huge government investment in infrastructure, renewables, and transmission upgrades. It's like a rising tide, and Viviana seems perfectly positioned to ride this powerful wave of demand.
Okay, that is an incredibly compelling growth story. I mean, it sounds almost too good to be true, right? But a good analysis always looks at both sides of the coin. So let's pivot and look at the bear case. What are the risks here?
Well, the first major red flag that pops up is debt. Get this, just 2 years ago, the company's debt was a pretty manageable 10 crores. Today, it has ballooned to 51 crores. That's a 5-fold increase. So let's break down these key concerns. First, obviously that 5x jump in debt. That's a big one. Second, there's been a notable change in leadership, with a CFO resigning just this past August. And third, the valuation. With a price-to-earnings ratio of 38, the market has already priced in a ton of future growth. What that means is the stock is expensive, and that leaves very, very little room for error.
So, okay, we've got this incredible growth trajectory on one side, but it's weighed against some very real concerns on the other. How does the analysis bring all this together for a final verdict?
Here's the trade-off, really, in a nutshell. On the one hand, you've got that stunning 4x revenue growth, a massive order book, and insiders showing real confidence. But on the other hand, you've got a 5-fold debt increase, that leadership uncertainty, and a high valuation that pretty much demands perfection.
And this brings us to the final verdict from the analysis. The potential upside is, well, it's immense. We're talking a possible 3 to 5-fold return in the next 3 to 5 years. But, and this is a huge but, it all hinges on one critical condition: flawless execution. And that right there is really the core tension of this whole investment case. The potential for that multi-bagger return is clearly there, but it feels like it's walking a tightrope over some pretty significant risks. So the ultimate question for any investor really is this: do you believe management can navigate these challenges and deliver that smooth execution?